Hey traders, this is Blake Morrow with Trader Summit, and today I have Mr. Beat Nussbaumer from Macro Beat. Good to see you, Beat. It's been a while.
Hi, Blake. How you doing? Yeah, not too bad, not too bad. We said we're gonna catch up a little bit more often this year than last year, but time is
I'm looking
flying, isn't
forward
it?
to it.
Yeah,
Look,
time is just flying all the time. It's
it
crazy.
is, and speaking of flying all the time, I mean, it just seems like we kicked off a new year, but this is a really busy week.
Yeah,
You got all like the last year was a whirlwind with all these central banks raising rates. Here we have the Fed this week coming up here in just a couple of days, and it looks like they might be done raising rates. What are your thoughts going into this week overall?
to be honest, I have a sort of various sort of feelings. So first, as you remember, I was quite a big CPI sort of hawk last year, and a Fed hawk, and really turned sort of more dovish towards year end or the later part of last year. I still believe that the front loading the Fed has done, as well as the other central banks, could prove to be a policy error, but maybe a bit too early. I'm still very concerned about the speed that they hiked. But here's the problem, and I think that's the problem the Fed is in now. I agree with you. We expect 25 basis points, which is pretty much priced. I think few people see a second 25 basis points a bit further out. So let's say a total of 50, and then we're done. Now, the problem we have is, and I think we briefly touched up on this last week when we had a quick call up, the two of us, is financial conditions.
Yeah.
They're by far too loose. So if the Fed is really serious and still want to fight this higher for longer mantra, which they seem to do, then they have to do something this week in terms of stamping the authority on the market. That doesn't mean I expect a 50 basis point surprise, I don't think at all, but it has to be somewhere else, whether it's on the QT side. It's just one way of addressing, because the market is just running with this, the Fed is done, equities higher, blah, 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 blah story, and two rate cuts further out in 2023, right? And the Fed, they kind of say they don't see rate cuts, but well, then do something. I think the big problem, I think, is CPI is so political. The Fed has no other choice than to talk tough until everyone can actually see that CPI collapses, or that CPI is actually really going down. And that's maybe the first point where the Fed can again separate into the doves and the hawks, and go back to the the old mantra. But right now, I still think the Fed is going to be by default behind the curve, because they just cannot let go. What happens if, and that, to be honest, is still on my mind. I haven't really figured it out. I'm still a CPI dove in the front end, a really sharp move lower in CPI, core CPI, PCE, all that stuff. But now is this China opening up?
Is that
How
gonna
is that
is that
turn
gonna
out?
spark those
Is this
pressures
gonna
again? Right.
exactly right? And I think the Fed has the same issue. We just don't know. Let's be honest, right? And the Fed doesn't know. So now so what do they have to do? They have to talk tough, stay tough, have the CPI really coming off hard to a point. To be honest, I think 3% would already be a small victory, right? I mean, it's not going to be 2. We know that, but could it be 3 by June, July? I wouldn't be surprised. But what I'm not sure yet is, do we do this, right? Do we have a sort of, and I think this is what happened in the past. I think this is the problem the Fed might have, or central banks. Do we get a reacceleration? We've seen some European CPIs now, Spain and Austria, that has reaccelerated, right? So I don't think that's the ECB really wants to see that. So the ECB is going to go 50, and there is no value in the ECB to back off verbally. So I think the ECB is going to stay tough. The doves try to muscle in, but I think the hawks are still in charge. And if Lagarde for once kind of manages to get through the press conference without a hiccup, that's a message she will deliver. I think there's a very clear. I think it's today. I think, what is it? The first time today since late December that we again pricing a full 50 basis points for the ECB. But I think we're going to go 50. We're going to go another 50 after that. So I think on that side, I think central banks will try to stay the course.
So what? Okay, now you said something that I think you're really telling us what the market is already assuming. The Fed's going to raise another 50, maybe another 50. they're going to try to be hawks, but it hasn't mattered. The market's kind of ignored what they had to say. You got the ECB that we already are very well. They're going to raise another 50 and 50. Is this all priced in? And what does it mean for let's start off with the dollar, well, the euro dollar, since that's kind of like where, I mean, that you could argue that has already been what has really, driven the euro to where we're at right now. I mean, the euro has really,
correct,
just kind of gotten to a point where we are, pricing it. We've already priced in that. So where do we go from here after this big of a move?
To be honest, personally, I when we've been down at 95, 97 in the euro, I had sort of the idea of euro going 115 in 2023. We've done a lot already at the back end of last year, a lot in the beginning of this year. And I actually think, even though it's a bit crazy to have like two different views, but I think the dollar has sold off too much, too far. Equities have gone up too far, too fast. And so I think the market is sitting on this consensus trade of short dollars, long bonds, long stocks. And I think they're actually going to get smoked out of their position, as we do so every single year, where the market is running ahead with a story. It blows up end of January, mid-February, to come back in March and April. So I think the core dollar short is correct, but I would not be surprised if euro would come off to 105, 104, 103, even if need be, if we get a proper shakeout. I think as you rightly say, the positions are there, the consensus is there, the market is long euro and short dollars for all that we know. Fed done, ECB now sort of follows through. And I think, I have this sort of sneaky idea that the risk is on the hawkish side for the Fed. The only problem I have is, given how much the market has actually ignored the Fed and has just put money on this sort of the Fed is done story, that the market will try to defend that view. Now, that is where QT comes in, maybe. Or let's say, what I don't know is how serious is the Fed really about their message.
Yeah,
I feel like they should be serious. So I think we could have a hawkish surprise on the side of the Fed. The ECB, to be honest, I think is sort of, that path is pretty much kind of clear right now. So I think that is priced. Even the peak rate at 350 or 2 times 50 now, whatever, is done. So I think there is a risk on the downside in the euro in the short term. I also think dollar yen could go back to 133, 135, smoke a few of those dollar yen shorts out. To me, it's just all too cute right now. And that's why, yes, I am core dollar bear for the year. But I think Q1 could have quite a few surprises, and it could actually start as early as Wednesday's Fed.
So, with that being said, what I hear what you're saying. What could be the driver that could drive the euro above 110? Do you think there's a scenario that happens this week? Because I hear what you're saying, and I agree with what you're saying. I don't disagree, me personally. But what would be the catalyst that really drives the euro into new highs, and where we have to reevaluate and say, maybe that 115 level that you were just talking about, which happens to be way up here, maybe this happens before 105.
Yeah. To be honest, I think if the Fed, let's quickly think about the macro side, right? The data starts to become a bit hit and miss. Some data weakens, some data still looks okay in the US. Now, the window for the Fed is getting more narrow. So that means they have to make a stand actually this week, to change the perception a little bit of how the Fed looks at the market versus the market looks at the market.
Yeah.
With every month they miss, the data is probably going to weaken and give the market more bullets or fuel for actually that view of potentially to get to rate cuts further out in the year. So I think if the Fed is not really putting its mark on Wednesday, if this ends up to be like a kind of non-event, or like a dovish 25 and one and done and this kind of stories, this could be the catalyst that the market really goes, you know what, the Fed is really done here, right? And to get the market back from that view, it's going to be very, very tough. And that's why I think the difficulty right now on the trading side is nearly impossible to really say what the Fed really, really, really wants, right? And I think that is the answer. So I think the reacting to the event is maybe this time the better kind of idea than the preempting what's coming out on Wednesday. That's at least how I'm gonna play it. I don't have a lot of dollar risk. I played hit and run all of January, which actually worked quite well, surprisingly. Just playing the ranges, playing our levels. You know, we look at charts, we look at macro, but if there's not much macro, we look at charts. So we done quite well on the charts in January. I have no big dollar risk, even though I had big views for the year, but the levels just, you know, dollar yen selling off down to 127 and a quarter. I expect the dollar yen to hit 120 when we were 145. There's just nothing in it to go like crazy short dollar yen, right? There's not, you know. And so in that regard, yeah, maybe it's a bit selfish for me to expect or hope that the Fed is putting its authority on this week, but I actually think they should do, right? I mean, something has to give. And otherwise, just stop talking, right? I mean, you know, you have like all these Fed officials singing from the same hymn sheet to do what? To not push back that the market is pricing 2 rate cuts? I mean, come on, right? Yeah. So I think, and that's why I say the timing is important, because February, March, April, you know, like there's a risk that data is going to get weaker. Yeah. So this is a hard sell in like 3 months' time. So if you want to just have a correction in the market to the tune that, you know what, there's a two-way risk here and not just a one-way story, it got to be this week.
Yeah, that makes a ton of sense. So we've talked a lot about the Fed. We talked about the ECB. Yeah. How about the Bank of England? Do you have any thoughts there? Or how are you trading the cable?
Yeah, to be honest, I don't trade the cable. I trade the euro sterling. Okay. I'm short sterling against the euro, mainly because of my core views about. So I have a negative view on the dollar. I have a negative view on sterling still. So cable, you know, a lot of people say, "Oh, look at how sterling came back." If you look at the crosses, actually, cable is more of a dollar story than a real sterling story, right? So it's sterling may not look as bad as it did when we had these whole political issues there in September, but as you look on the chart here, sterling is still relatively weak versus the euro in the bigger picture. And I just think economically, all the problems we have here in the UK, we're going to get another 50 basis points hike by the Bank of England, but rate hikes didn't really matter in the UK. If you think about sterling, really got hit very hard on the whole stagflation story, weak growth. The only G7 country that hasn't really reached pre-COVID growth. The whole political side is a mess, so I just can't really see much good in sterling. The interesting part is when we had this mess in September, October, we talked suddenly about 6.5% peak rate by the Bank of England, which would have probably nuked the UK economy. Now that is down to 4.5%, even maybe 4%. So maybe the interesting part could be that the Bank of England start to signal this week that they get to a point where maybe they do a Bank of Canada kind of pulse or whatever you want to call it, which in a funny kind of way maybe actually is positive for sterling, right? So I have reduced my positions a little bit because, again, for the same story, it's like now, you know, 2022 was easy to see what they do, when they do it, blah, 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 blah. Now comes this kind of fine-tune, and now it comes this kind of, you know, funny enough where not hiking too much may suddenly become more positive, if you know what I mean. You know, it's a very strange mix in the UK. So if, for example, we really think peak rate is lower in the UK than we had there in October, I actually think it could be a short-term positive. But on the medium term, I just think sterling is a sell. I mean, this, you know, I hate to say, I mean, I live in this country, but there's just not much good right now. I mean, we have so many problems here. And it's problems that are not solvable in the short run. It's stuff that has been queuing up for the last 5-10 years, and they just all hit at once now after the sort of double whammy of Brexit and COVID. And so that's why I don't think we get out of the woods very soon here in the UK. So I think sterling continues to underperform, especially versus Europe, because I think Europe is boring. And right now, boring might actually be good.
Well, tell that to all the traders this week, because we're looking for excitement, not so much boring. But you know, it's great, Beat, to get your views on the markets. And like as you pointed out, we haven't had an opportunity to really speak towards the end of this last year.
Yeah.
We you know, we had some things going on, but it's good to have you back. And I'm glad to get your views, and I know the Trader Summit community is glad to get your views ahead of this really key week. So if you guys and gals really like what Beat is doing, make sure you give them a thumbs up, subscribe to the channel so you don't miss this exclusive content. So how do I follow your work specifically? What's the easiest way for me to follow what you do on a daily basis?
Yeah, to be honest, I'm on Twitter, I'm on LinkedIn. So you can follow me there. I have my website, macrobeat.co.uk, which obviously I can't share too much content because I have sort of a close community. I'm always happy to let people have a sniff around for a week, drop me a message either on one of these sort of social media or my email, beat@macrobeat.co.uk. Have a look at what I do for a week, whether you like it or not. So like I said, I can't share too much content out there, which I show just occasionally. But it'd be great. Just have a look if you like it, what I do. There's a lot, you know, macro, short term. To be honest, I've been 20 years a spot trader and 20 years a macro trader. So I cater for both elements of the trading side, also the macro side. So I think that makes it probably at times interesting to follow both sides of the story.
Absolutely. Well, Beat, it's great to hear from you, like I said, and I look forward to catching you after all these central banks and probably over the next month or two.
Yeah, perfect. Thank you so much for having me, Blake. It was a real pleasure.
Our pleasure. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.